Welcome back. And one stock that has really taken a knock in trade today is Kaynes Tech. Sunny, largely because of a note coming from a brokerage house suggesting that, we've seen some corporate governance concerns with regard to Kaynes Tech, free cash flow concerns as well. I'm not sure, Sunny, whether SBI covers or SBI Cap Securities covers a Kaynes Tech. But what view do you have with regard to a Kaynes Tech? Give us a perspective.
Yeah, I think so. I have not gone through the note of another broker which has come out on Kaynes.
Of course.
But having said that, anyway, Kaynes as a business continue to trade at an very expensive valuation and in a subdued market sentiment. Obviously, now we always see that the stock which are trading at a relatively expensive valuation tend to witness sharper correction. And we all know that during the quarter two also there was some a slight reduction in terms of growth outlook for second half of FY26, and FY27 is a year where the company has guided for relatively better growth going forward. So to some extent that has also weighed on the stock as we speak. Coming to valuation, I think still the stock is trading north of 70-80 times price to earning multiple. So would like to wait and watch and maybe buy on dip is the right strategy as far as Kaynes Technology is concerned. Maybe one should wait for clarity from management in terms of a few observations which other brokers has raised in terms of the corporate governance issue which the company is currently facing.
Exactly. That's exactly what we would try and, want to understand from the management, given that there's such a sharp reaction as well in the stock price, currently lower by 6.5% as we speak. So it's taken quite a bit of nosedive, actually, post that note that came out from the House of Kotak. But that said, take a look at what else has been happening in the market, because there's also a Biocon, which is currently in the red as we speak right now. So that has also been taking quite a bit of hit as we speak. But let me welcome on board Mr. Ramesh Kunhikannan as well, the Executive Vice President, Vice-Chairman, I beg your pardon, from Kaynes Tech, joins us on the show right now to talk about exactly what is, the takeaway from the annual report and why is it that you're seeing that kind of move come in on the stock price. Ramesh, hi, afternoon. Can you hear me clearly?
Good afternoon. I'm able to hear you clearly.
Right. Ramesh, thank you so much for your time. Ramesh, I wanted to understand now, Iskraemeco, and I hope I'm pronouncing that right, it's contributed to about almost 44% of your FY25 consolidated PAT, right? Despite being consolidated for only 6 months. Tell me what explains, firstly, this disproportionately high profitability and if this kind of, margin level really is sustainable.
See, if you see last year, this Iskraemeco was not there. Now, this year, after we took over, there is the report talks about some intercompany related party transaction. If you see all those things it is between KEMPL, Kaynes Electronics Manufacturing Private Limited, then Iskraemeco. We earlier also we were supplying PCBs from here to there, from Kaynes Group to Iskraemeco. Today also, we are continuing to do that. And our margins are aspects of the total impact. Our buying power is more, and then we have better margins. We are also planning to clarify all these points to the media on Monday or Tuesday.
So, but this is super valuable, given the fact that the stock is tanked 6% today. It's good to get a perspective. Hi, this is Harsh here. Ramesh,
yes,
give us also a sense with regard to cash conversion. There's also been some skepticism that cash conversion cycle has been difficult to come through. Your sense with regard to this, and do you believe a quicker turnaround with regard to cash as well as working capital requirements or days coming down fairly quickly, or will it take some more time?
This, as far as cash cycle is concerned and working capital, we had given during the year beginning itself, by the year ending March 26, the financial year ending March 26, it will improve. It will go to around 80 plus days towards that number. So this will further improve. And year on year, it will improve.
There is this noted 483 million rupees of loss that you incur in first half that needs to be reconciliated with a full year profit of 6 million rupees for
We have not
Iskraemeco,
incurred
right?
any loss.
Walk us through the major cost drivers or the kind of one-offs that resulted in this swing.
Come again?
So just trying to understand this loss of 483 million rupees that you incurred in the first half of FY25. That needs reconciliation with the full year profit of 6 million rupees, right? For Iskraemeco.
Booked any losses in Iskraemeco?
Okay, all right. So give us a sense on the goodwill or the intangibles that you've been.
There is a cash delay because of collections not coming.
Correct.
But otherwise, there is no problem at all.
Sure. Okay. So when do you see the unwind on that?
That during this quarter and between next quarter, the meters will get installed and then those cash cycles will come back.
Sure. Okay. Okay. And so why is there a block?
I'm very confident on this.
Sure. So why has cash been blocked there? It's only because it's stuck in inventory, is it?
No. It is a payment model.
Okay.
As you supply, we get only 30%. Then once we install, we get another 40%. Like that, it goes.
But when, sir, do you hope to get the cash conversion cycle under control?
See, in my business, anything between 80 and 90, I consider it as a control.
Okay.
And I will be able to very confidently be able to bring it down to that level.
And sir, there's also, I won't call it an allegation, but there's also a point made that the acquisitions that you've been making, a lot of that has been going towards goodwill and intangible assets. Talk to us about the accounting there. Do you believe that the accounting, from an accounting standpoint, pure kosher?
We have not, I don't want to tell it's an allegation, but we have not accounted anything like that.
Okay.
And there is no goodwill on that. We will be coming to public and we are thinking to clarify these points on Monday, Tuesday.
Ramesh, what your investors would also want to know right now is the fact that there is elevated CapEx requirements from what we understand, and please clarify if we're wrong here, and the pending government grants as well. How is it that you're going to prioritize capital allocation going forward?
If you see, we have cash in our account of around 1,000 plus crores, and what we need for our CapEx is only that much.
Could you quantify that?
And, for example, if you see our semiconductor business, we get from the government 50%. And that also, the agreement is almost through. We are just pending for some papers, but otherwise it is through. It will definitely come in. I am very, very confident. There is no confusion in that. As far as CapEx is concerned, we have uninvested money of around 1,100 crores with us.
Okay. The other thing that I would want clarity on, which my colleague was also trying to get in here, you've recorded a very sharp increase in intangibles for technical know-how. Having said that, there haven't been any additions in your intangible assets that were made for Iskraemeco acquisition. Just clarify this point for us.
That is not meant for this. These funds are required for our semicon and other businesses. But since that licensing has not yet come in, we have not yet paid. And that is why it is, if you see, it has not yet come in.
Could you clarify in greater detail, Ramesh, as to what is the nature of these intangible additions?
See, for example, in our semiconductor business, we have to pay to our partners for training us, for developing us. And if you see in our project report also, all these things are there with the government of India. When we got the license, also when we got the approval, all these things are part of that. And this every company has to do. Today, the knowledge is not there in India. So when the knowledge is not there in India, we have to acquire this knowledge. For that, we are making payments.
Okay. Ramesh, the other thing is, accounting for CapEx. I know you clarified on the point about CapEx, but I just want to, get this thing clear and right on record. Specifically, your cash CapEx is not really aligning with asset additions. It appears a little bit complex. What is explaining the mismatch, and how is it that your investors and shareholders should read into it?
I think in the call, when our CFO explained this, people have misunderstood. They have accounted for our circuits new expansion, which it's only a thought process. We have not even applied to the government. We have only, at that point of time, we have applied. So that is if you add that only, there is a mismatch. Otherwise, there is no mismatch. If you see, 10 days back, I was in Mumbai market, and we have clarified to whomever we have met this point.
So are you saying that no addition was actually made?
Come again? No addition was actually made means?
No, what you're trying to clarify right now is that the CFO
Actually, if you see,
spelled out something in the call which was actually not done, right?
Yes, it is not understood it well. For example, we have planning in Tuticorin one project. So people have added that. Once you add that, there will be a mismatch. But if you are not having that, then there is no problem at all. Absolutely no problem.
Okay. And Ramesh, just from a perspective of, if I were to just zoom out a little bit, inventories, trade receivables have gone up by 50% when I'm looking at it FY25 end to H1 FY26. So you're currently sitting at around 2100 crore in terms of receivables plus inventory. Why is that so? Is that just part of the business, or is there what's happening there, and how quickly can it unwind? Give us a sense of that.
See, in that total, they have added even for machineries, whatever we have ordered, and machines which has not received it. But if you see, it is all part of the business only. There is nothing other than in the business.
Okay. Ramesh, the other thing that I wanted to, talk about was, and, a lot of analysts are talking about it right now, they're noting some inconsistency in related party transaction disclosures right now. And this is a concern which has come about today. How is it that you will address concerns around transparency and governance?
See, if you see, our auditors have audited us, and we have a company which is strictly going by the governance cycle. I am not seeing any difference in that. However, whoever has got doubts, we have then and there clarified. Whoever has asked us, and they are all convinced.
Okay. The other thing I also wanted to understand was, with nearly 28% of your net margins, which are implied now for second half of the fiscal from smart metering segment per se, what are the operational or regulatory risks that could compress margins for you?
Margin-wise, I am not seeing any compression because ours is all B2B businesses. Even our metering, if you see, we are only supplying to, it is not from dealer or distributor. So our margins are a fixed margin. It's a part of our business. It will not vary. It will be more or less constant. And I'm pretty confident that it will stay where it is.
So what's your working capital days?
The top line drops very steadily.
Right. Ramesh, what's your working capital days currently, and your target of 80 to 90, you will do that by end of FY26?
Yes.
And what is it currently at? The last I checked, it was 120 days plus. Would you have?
It was around that 115.
Sure. So that's going to be a significant improvement, a 30 to 40% improvement in working capital days.
During the year, we will always get material which is difficult to get. So we will buy and keep it. Our business models are like that only, always.
Understood.
So for the year, we will secure the material because many a times materials are not available, so we'll secure that.
I understand. And this will continue as you journey towards that $1 billion revenue mark?
It will taper down sharply because our buying powers will increase, our supplier base will increase, and then we will be enjoying more credit from our suppliers.
I understand. Ramesh, you're a 33,000 crore market cap company. You've got around 1,000 crore of cash sitting in your balance sheet at this point. How are you planning to utilize that cash?
There is a clear plan of CapEx for that.
Right.
It is laid out and it is a clear plan and it is used only for that purpose. I cannot use it for working capital or anything else.
Sure. Yeah. So just trying to get a sense of that. Okay. Understood, sir. We'll let you go on that note. Thanks so much for coming in and clarifying at short notice and speaking exclusively to us.
Thank you very much.
Thank you, Ramesh. Truly appreciate. That was interesting because that stock took a knock on the back of that brokerage note. And of course, Ramesh seems to be brushing it off and suggesting that there isn't too much of a concern. They'll come out on Monday though. So they're going to wait all through Friday, Saturday, Sunday and come out on Monday and clarify to analysts exactly point by point on each of the concerns which have been pointed out in that Kotak institutional note. So that's something we'll have to watch out for. But today, of course, the stock down 6% and closing at the day's low. No recovery in sight, despite that that word coming in from the Vice Chairman.
Absolutely no recovery. In fact, it's struggling sub that 5,000 rupee per share mark.